Hi there traders, this is Steve Miley, the market chartist for FX Explained, and here we're having another look at our weekly macro watch update, looking at all the geopolitical and fundamental macroeconomic events that are impacting markets right now. And this is for the week commencing the 18th of May 2020. Well, we've seen a real shift towards risk off with the growing US-China tensions and the easing of lockdowns. So let's start off by looking at the macroeconomic and geopolitical developments. So China and US tensions are rising in here. A lot of blame game going on already. President Trump and the White House pointing fingers at China regarding the spread of and the risks from coronavirus. And that being seen as a real negative for markets. Also potential threats of tariffs, having only just signed that trade deal, remember, the phase 1 trade deal at the beginning of this year. Also, we're moving into a new phase of the lockdown, so coming out of lockdown in many European nations, in the UK and in some US states in here, and that's bringing its own fears with it, a lot of confusion with it, and a lot of concerns of a potential second wave of the spread of COVID-19 coronavirus. We're already seeing new cases in Wuhan. We're already seeing some uptick in cases in South Korea, who had this pretty much under control to a greater extent, and also a rise in some cases in Germany. So some real fears that the lockdown, the easing of lockdowns could have negative impacts and see us move back into lockdown, maybe potentially fairly quickly, if we get indications of a potential second wave of the coronavirus hitting these nations. The data continues to deteriorate. US retail sales was the standout in the last week in here. The US retail sales report fell 16.4% with consensus for a fall of 12%, a disastrous US retail sales number. And also we've seen in here JCPenney, a household name in the US, a 118-year-old company that weathered the storm through the Great Depression, filing for bankruptcy in the past week. So let's take a look at how these global financial markets have reacted to this more negative risk-off shift with the deterioration in some respects of the macroeconomic and fundamental backdrop. Well, the S&P 500 fell last week, a significant setback in here, creating a double top pattern in here, setting up potentially for a more negative theme, despite the rebound that we saw at the very end of the week. And similar outlooks from in here, the German DAX equity stock future index in here, market pushing lower. We've got a kind of head and shoulders top pattern in here, looking far more negative, and the other European UK stock indices also looking negative from last week. On the flip side, on the safe havens, gold is pushing back higher. A strong rally for gold last week, back up close to multi-year highs. Whilst US Treasury yields have gone lower. Lower yields, that's higher prices. As bond prices have gone higher, another rush into those safe haven assets. In the Forex environment, we've seen the US dollar benefiting again in here. The US dollar very much seen as a safe haven currency right now during this pandemic. And the US dollar's rallying significantly last week up towards recent multi-week, multi-month highs. Whilst the pound was a big casualty, partly due to US dollar strength in here, but the pound also looking negative against the backdrop of potential tensions with the EU. And copper has dropped as well, with the stock indices in here reflecting that shift to more of a risk-off theme, coming back lower, having last week set a new cycle high. So now let's take a look ahead to the week commencing the 18th of May. What have we got coming up? Well, as ever, the COVID-19 global spread and the impacts of the easing of the lockdown are going to be certainly watched in here in the coming week as ever. We're also going to take a look at central banks. We have the Reserve Bank of Australia minutes. They come through on Tuesday. Then we have the People's Bank of China interest rate decision on Wednesday. And later Wednesday, we get the meeting minutes from the last Federal Reserve meeting, the FOMC meeting minutes coming through on Wednesday evening. Furthermore, we get the Federal Reserve Chairman, Jerome Powell, speaking to Congress on Tuesday and a further speaking engagement on Thursday. So those are always much watched. Let's take a look at the data. So we have Japanese GDP Monday. We have those RBA meeting minutes as mentioned on Tuesday, followed by UK employment report, the German ZEW survey, and Jerome Powell testifying Tuesday. Wednesday, that PBO interest rate decision and the FOMC meeting minutes as mentioned. We get global market PMI data Thursday alongside now the much watched US jobless claims data, and again Jerome Powell speaking on Thursday, and the week ends with UK retail sales. I'm going to say to you guys, please be safe out there and have a great trading week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.